how do you want to sell to banks this year if you're a fintech? For all my friends in London, in the US, in Asia, who are you calling and asking, how do I get in? Who do I talk to? This is advice meant for you. So let's take some questions. I like questions. What do you guys got? Back with everybody's favorite software engineer who never does any programming, Giorgio Zanetti. I work at a wealth management innovation lab, as does Giorgio, and we see a lot of stuff. We're over in London a lot. We've been up in Berlin. We sit in Zurich. Giorgio was just 3 weeks in the Valley in San Francisco. And we wanted to share some of the tips that we've discovered. So kind of the top 5 things if you're trying to launch a fintech company to sell into a bank as your potential clients, because we get so much inbound traffic and we've seen so many of the best practices and also some of the worst practices that we wanted to give you some tips about.
Yeah, exactly. And maybe to add to that, we are going to focus on the tips for B2B startups. So if you want to be a standalone independent startup, those tips are not for you. And also, we are not going to mention that the overarching theme is that banks need to be scalable and digitize their processes. So all of the tips we're going to give are going in this direction, more or less. So
top tip number 1, and we kind of made some notes on this beforehand. Be in a trending area. So be in what's hot this year.
Yeah.
For me, it's definitely been artificial intelligence, and sorry to overuse the buzzword, but it's at the very top, looking down the slope on both sides of the Gartner hype cycle right now, which means we're 5 years off commercial scalability. But at the same time, most of what we looked at in the past 12 months was at least this.
So what's going to happen is that if the topic is hyped, innovation managers or managers in banks, they're going to look up for startups in that area on TechCrunch or Crunchbase. And if you are in one of those trending topics, it's going to be easier for you to find clients.
So why AI? Why AI, if we can talk, because you looked at a lot of companies in that space.
So why it's hyped or why it's a good thing to be?
Why is it a good thing?
Well, it drives efficiency because it aims to, substitute some work that is done by a white collar or it's then done better by an algorithm. So for banks, efficiency. Yeah, exactly. For banks, it's very compelling value proposition. You say, you automate this process, it's done better with less errors, and there is no downside.
So the hottest one that we've been looking at, you've seen a few episodes perhaps from several different fintech channels like this one where chatbots are very in because that's about back office efficiency right now. So it's not like you're going to give the highest end wealth management advice over a chatbot in the year 2017 or 18 or 19 as far as I can tell, but you may be able to replace some aspects of your basic user interfaces around call centers, like my credit card needs to be blocked. I'm going to Argentina, make sure my credit card works. This kind of stuff is very much call center material which gets routed to somewhere cheap anyways, and therefore, a bot behind it is not a bad proposition for a retail bank right now. So that's one aspect of AI, but there's a lot more in artificial intelligence to do, like client preferencing. And one of the things we've been chatting about recently a lot was the concept of filter bubbling. If you want to explain that basically.
Yeah, that applies a little bit more to social media, where Facebook and Google, they really know what you like and what you're looking for. But then the end result is that the users, they get a filtered picture of the world or what is out there. Let's say I'm a Donald Trump supporter, and then I get only the articles about how good Donald Trump is because I'm going to read this, and I'm going to reinforce my beliefs about how good Donald Trump is. In finance, we don't have this yet, but it's something we have to be mindful of. If we start to personalize the content of our clients around his or her preferences, we need to be really mindful not to create those bubbles. Yeah.
Which is like self-reinforcing things.
Yeah.
So if you're right-wing, you only see right-wing content.
Yeah.
If you're left-wing, you only see, and the two worlds no longer meet in Google, in Facebook, in Twitter. However, in a bank system, the world doesn't exist. You don't have a filter bubble yet.
Yeah.
So be aware if you're selling into a bank with an artificial intelligence tool, especially over social media, as you've got the fire hoses from Twitter and Facebook, they haven't got any ability or clue what you're talking about yet. So you've really got to go slow in these spaces. The second big area, and we're still talking about the first tip, which is be in a hotspot, is digital identity. Can you talk a little bit about what you've seen?
Yeah, so with the digitization of everything we do, it's becoming more and more important to be sure that the person we are interacting with over the internet is who he says he is, and then we have to be sure about that. So there are many startups are flourishing in this area in many different segments. So one problem is how do you authenticate yourself securely? There are startups doing biometrics. How do you collect all the data from different data sources? How do you store them in a secure manner? How do you transmit this data in an anonymized way? So the topic is huge. And some of the startups are using blockchain, some others are using some other techniques, but it's a really hot topic. For banks, I've seen the most compelling use case so far is for anti-money laundering, KYC, client onboarding. So if a client wants to buy...
KYC means?
Know your client. That means every time you onboard a new client or an existing client wants a new service, you need to do some background checks. If there is a provider that gives you already a pre-filled ID saying that this guy is a good guy, would solve a lot of problems for them.
Let me tell you why. So digital identity as a white spot or a big green field to target your startup at is a really good idea for trending. Just a practical example of why. I was talking with someone yesterday, and a friend of ours basically just got picked up in the anti-money laundering world. This poor lady found a project working with kids to provide them water in Africa and sent money. She happens to have an Arabic name and sent it to a bank with the same sort of background in Africa, and they blocked the transaction and called her up and made a big stink out of it, when in fact the intention behind the thing was perfectly good, right? So digital identity and how you transport your identity and authorize and validate things is becoming really important. The third space that we identified was prospecting. So banks are really bad at getting new customers. Most of the institutions that I am aware of and talk with their innovation guys, their digital guys, net new clients is what it's called. They're just on the way down, right? And banks need to be able to generate new clients on a net basis to bring in more than they lose every year to stay profitable. So
this is something big companies, big banks are kind of copying from startups, because startup in the last 5 years had to be really creative to acquire new clients with some growth hacking strategies, with influencer marketing. Big banks are catching up at the moment, so maybe if you go on the big banks' Facebook pages, they have a few thousand followers compared to some other startups. But also, if you go on the homepages of many banks, they're really terrible at creating. You don't know where to click. So something really useful for big banks now is try to bring this startup funnel which is very efficient and it's thought through every single step to big companies to try to bring the same growth hacking mentality.
So, small companies who are running digital businesses tend to be super agile and flexible in terms of prospecting new clients, and banks are still very much in the world of let's book a meeting, have a first discussion, it's going to be at our place. The whole process of getting to even talking to a potential prospect is super painful, and with social media restrictions, it's very hard to create social circles of people being aware of you outside of your banking job. What else do you know about? Which is really what brings prospects. So startups bringing that kind of technology-enabled skill, that fine skill to banks is important. And the last place that we identified in the first tip, being a hot area, is kind of reg tech. So back office efficiency. I covered in my last episode with Kurmram and Patrick's team how they've kind of, with technology, made the back office processes a lot more efficient, dealing with regulations and making banks be able to work more at what they're good at, which is advising clients.
Yeah, this goes hand in hand with the first AI trend, but maybe you can also simplify a process without using any machine learning. You don't need to use AI in anything you do. It just need to be a digital process, maybe making two pieces of software working together, and yeah.
Second area, flying through. So how do you want to sell to banks this year if you're a fintech? For all my friends in London, in the US, in Asia, who are you calling and asking, how do I get in? Who do I talk to? This is advice meant for you. First of all, be B2B2C, okay? So business to business to client. So in other words, have a white label solution that a company can plug in. So another way of saying it is software as a service.
But do you think necessarily B2B2C, or can it be only B2B?
It can be B2B.
Yeah, okay.
But explain what that means, because I can't.
So
Checking it for still run.
B2B2C is a solution that you sell to another company, and this company is going to use against its clients. A B2B solution is a company I sell you, but you're not going to use it with your clients, like maybe a back office solution that nobody's going to see.
But be in one of those two spaces. For me, it's kind of the same in that your service needs to be invisible to the end client, so you don't see your brand.
I think that B2B2C, it's a sub-segment of the B2B.
Of the B2B market. So, but basically have something this bank can strap on and make it look like they're theirs. If you're trying to be the next great robo-advisor in the year 2017 and build up, your vision of the market is to have 100 billion in assets under management in the next 2 years and whatever. I wish you luck. I don't think it's going to happen. What I'm seeing is that the fintechs who are having real success landing investment in this year, 2017, and getting great customer traction and revenues are working with banks together and fixing a problem that they have in a much more efficient way, because their own IT environment is very difficult to implement that.
Yeah.
So adapt to the bank's needs. Try to be super easy to integrate is something else that we jotted down, which means that you have to have kind of an open product. So the banks you're going to work with are going to get super technical super fast. You're going to end up with some perfectionist product manager who says it needs to have that button on the left side. If you can't do that in a very short time, you're dead. So you need to be very agile in your software development and also your structure around how your product looks and feels to the end client.
Yeah, also on a tech side, many of our projects must run on premise. So if we meet a startup and I say, oh no, we are on Amazon and Amazon only, then for us it's much harder to get the approvals to run the POCs, and then even if the POC is successful, we cannot use it as an end product. So it's really important that the solution is flexible, and then the integration with the banks is smooth.
And really practical tips on this: have the compliance, the regulatory, and the legal documentation already ready. Be ahead of the bank, know more than they do about the regulations. So a couple of the startups that we've worked with, they knew a lot more about Basel III than I do. I'm not an expert in that field of regulatory capital, but when they came in, they had books this thick and they could talk about it endlessly. So I knew that as the innovation guy, when I tried to strap them into a pilot, that they had my back on this, that they knew the game as well as our Basel III people did. And it's the same with compliance, legal reg, the tech guys. So know that you're going to be implemented onto the bank's server farm, wherever that is. Be easy to integrate and have all those stories ready. And a really pro tip that I can give you here is if you've got a regulatory sandbox approval, you've got an extra card in your box. The FCA in London, Financial Conduct Authority, has its own sandbox. One is being introduced here in Switzerland. In the US, FINRA has one. So if you can get into one of those programs, if you haven't applied yet, make it a priority. And find out what their deadlines are and try very hard to get in, because that stamp of approval from the regulator that they beat you up is super important to a bank.
Maybe the last tip, and then we move on, is try to have a package that can be sold as a POC, which is not too expensive and is accessible, and then you can get quick feedbacks to see if it fits in the organization. Some of the startups we met were like, okay, how can we go forward? And they're like, okay, you give us $500,000, and then it takes 1 year, and then we say, no, we just want something. It's too steep as an entrance. So
the most pilots we do to start, you're going to work up like a lean startup. So just have a fixed offer that says, for 70,000, I do, or for 50,000 or 40,000, I do this for 3 months. It's software as a service in a test environment. I don't touch your intellectual property as a bank.
Yeah.
We don't integrate. We're going to do 100 client users. You're going to get this back. We're going to strap Google Analytics to it, plus your internal analytics package. Just have your story dialed in that they know and have confidence you can deliver within 3 months. Yeah. And then be ready for a 6-month onboarding was my last tip here, actually. So don't assume that you go and meet somebody and the pilot's going to start in 3 weeks. If your cash flow is that tight, don't work with banks. Try to get your product launched elsewhere. From meeting number 1 to actual start of something where you can send in invoices at least 6 months. And if you're not ready for that reality and you don't have the ability financially to make it that long, you're in the wrong game, my friends. So just be prepared for that. Tip number 3, the big tip, take part in programs.
Yeah, that's big. So what we don't like as innovation managers, maybe it's a bit we are biased, but we don't like when people reach out to us. Hey, I have this offer, I have this startup, it's amazing. You want to schedule a call? We're kind of, no, we don't like, because we get inbound emails every day, how many startups do like 2 or 3 per day.
We're like on Tinder, we're getting right swiped a million times a day.
So
It's just like, annoying. We don't want to be right swiped.
We don't want you to contact us, we want us to find you. And the best way is to take part of programs, do a good PR. And but like many of the startups we work with took part of accelerator we were sponsoring. So, and it's I think it's a great advice. Even if you don't need to participate you don't need money, you don't want to give up equities. There are some accelerator which gives you a lot of exposure to do POCs. I mean, the Kickstarter accelerator that was here in Zurich. Yeah. We noticed that many startups landed POCs with the sponsors of the accelerator, and then was just because they were there. I mean, I'm not saying they were not worth to do a POC, but I imagine if they were not part of the accelerator, the wedding would have not been.
And we tend to look at a lot more because there's so much of what they call logo vomit, right? So there's just so many startups in every little niche now in fintech. And actually what I'm mostly interested in is not fintech, by the way, but that's subject of another episode. It helps us focus in on who has already been curated. So to get into an accelerator program, you're already in less than 1%, and the accelerator did that whole filtering, whether it's Startup Bootcamp in London or it's Kickstart Accelerator, the F10 with 6 here in Zurich. I know they've already done their job, and therefore I'm very likely to talk to the 10 startups in their program this year in fintech. So it's more likely you'll end up getting a gig. A quick thing on, because we have a few minutes basically left, what not to do. Okay, 4th big tip. For me, it's being all over the place. So we've had startups come in, and it's 2 guys and a MacBook who have obviously been in the garage all night. And they talk about a blockchain, artificial intelligence, distributed ledger, user experience of that. It's pretty clear they're really smart people who have no idea how they're going to launch the product. That's not what we want to see.
Yeah, when you jump in and say, I'm a machine learning blockchain IoT startup, you're like, okay, that's the door. You can
go. You get 5 minutes max. And it's...
Yeah, you need to, we said you need to adapt yourself to the bank you work with, but on the other hand, you cannot overpromise. I can do everything for you. You present yourself as an AI company, and then I tell you, no, we are not interested in that. Oh, no, but we're not AI, we do blockchain. So...
know your story.
And then don't try to force me to buy something. Just be authentic and sell me what you're doing, and don't overpromise. And
2nd big tip: know who the hell you're talking to. I see this all the time, and startup entrepreneurs can be 18 years old or you can be 48 years old. I see the same mistake across every age, which is you come towards a bank and you see the brand and you say, I'm going to talk to Barclays today. No, you're not. You're talking to someone inside Barclays who's had a long career of being in marketing or in innovation, or is working at the asset manager or the wealth manager or as a private equities manager or as an investment banker. Know the difference between bankers. There's thousands of different specialties within the bank. If you're walking in to talk to a compliance officer, know who you're talking to, look up the background of the people, and also know their track record on trying to deliver pilots into the bank, because what you're trying to do is a business-to-business pilot for 50 or 100 grand. You're not trying to sell your $1 million vision and sell the company. And then what else not to do, which is super annoying to people who you are talking with at the bank, is then talking to everybody else at the same institution.
Yeah.
I've seen this in many cases, and it almost always ends up in that startup kind of being blocked out of that community. So if you try to open 16 doors and get forceful and say, well, I talked to your investment bank and they're interested, and then you talk to the investment bank and you say, well, I talked to your wealth manager, they're interested. Super unattractive, just it's human nature.
Yeah.
And then Giorgio talked about getting found. I think that's important, so create a pull. And you know, one big thing right now in 2017 is don't necessarily be fintech. I mentioned it earlier. If you try to play the card of I'm small, I'm young, I'm in a garage, I'm fintech, in a lot of cases, you know, there's big fintechs. Microsoft is a fintech, right? Fiserv is a fintech.
Yeah.
So don't try to just play the cultural card because it doesn't always work. What we want to see is the product.
Yeah.
Super flexible, easy to work with, ready to integrate, B2B, white label, know the tech, know the compliance regs. Last big tip, number 5, and then we're done for the day. You're too late on the following things, and this is just our view of the market right now.
Yeah, and then in brackets, you are too late if you want to sell B2B to banks. If you want to go with your own company, B2C, maybe you're not too late, maybe.
Yeah, if you want to sell your company, this was the wrong episode for you. If you're looking to make the $1 billion exit in 5 years and you're going to stay with that, I wish you good luck. We're probably not going to end up working.
I will start with peer-to-peer lending. That's already, maybe it was one of the first, the really big trend in fintech. When did it start? Like
12, 11.
Yeah, 5-6 years ago. And we are now, we don't know if it works or not with different market environments, and so everybody is a bit on hold. So
don't be in peer-to-peer lending right now trying to do a POC with the bank.
If you're already in peer-to-peer lending and you're doing good, stay. If you're thinking about starting, no.
Payments is one of my pet peeves, right? So I'll get pitched, I'm a wealth management guy, and I'll get pitched payment apps. I mean, the last thing I want to see is a payment app. In the year 2017, the fact is Apple's going to do it better. Google Pay is going to do it better. Payments are largely a lost battleground for banks. So I wouldn't go there with banks as a POC, proof of concept right now. Front-end apps generally, front-end applications. So we're going to install an app on your clients' phones and be part of that solution. Banks are so specific about how their front-end applications already look, and there's already a massive power structure of people behind that, controlling that, from technologists to business leadership, that anything that's a front-end user experience, you're going to suffer.
I mean, the reason is also, if you have a front-end only solution, it's kind of a weak value proposition, and then if you're a bank, oh wow, this is a great idea, let me talk with my designer and he can even do it even better. So if you don't have any meat behind the front end, it's
you got to have something patentable or unique about your service. And then, you know, don't pitch a new core banking system for a bank unless you're McKinsey or whatever and you think you can do that. I don't think that's a value proposition. So don't try to replace multiple systems. Most banks are running on hundreds of legacy systems all strapped together. They've already got enough to deal with. They've already got processes of their digitalization programs working on that problem. Being in that space seems to be particularly icky in 2017. And the last thing, you hate this one, robo-advisory. You know, there's more than 500. I think it's become kind of a commodity. We know who the winners and the losers are likely to be at this point. Unless you're trying to sell the company, I think doing a white-labeled B2B robo-advisory solution isn't good for the big banks. You'll have more opportunity maybe with the regional players, some of the smaller banks who just want to test it. So if you're going to pitch a bank, don't go to a big brand, go to second tier or challenger banks with that potential service and robo-advisory. I think that's it for today. If you have questions, I'd love to take them down below in the comments. Write me in the Whale app. If you don't know what the Whale app is, that's an app worth downloading. It looks like it's going to be a runner. And, you know, Twitter is always good for taking questions. So I really appreciate the interaction on the episodes. Thanks for watching. Thanks, Giorgio.
Ciao mamma.
Yeah.
Pronto? Sì, questo è Giorgio che parla, giusto per fare un po' di testing. Va bene, mi senti bene? Sì, sì, no, no, pronto.
Thanks for watching the episode. I hope you enjoyed it and took value from it. If you did, please like and share it. What I'm trying to do is open up the community of innovation together with fintech and the banking industry. I think we're all trying to do the same thing and at great speed. And I really get enjoyment out of the interaction with you. So if you could leave a couple of comments and recommend the articles and the episodes that we're doing to your friends, it would be much, much appreciated. Thanks for watching. So let's take some questions. I like questions. What do you guys got?